don't come to me with a problem. Come to me with a problem with, two or three potential solutions of what you think, whether we
Perfect.
think they're silly or not.
Welcome back, passionate investing community. Today, I have the pleasure of interviewing Kevin Bupp, founder of Sunrise Capital Investors. Kevin is a seasoned commercial real estate investor, top podcast host, and author of The Cash Flow Investor with over $1 billion in real estate transactions under his belt. On his podcast, Real Estate Investing for Cash Flow, he shares his 20 plus years of experience guiding millions of listeners on how to find and invest profitably in commercial real estate. So, with that, it's time to welcome Kevin to our show. Welcome, Kevin.
Thanks, George. Thanks for having me. Excited to be here.
Yes, well, it's a pleasure, and I do appreciate your show. I was glad I was able to mention that on the intro. I was a guest there, and
Yeah.
you do a great job. Ask some very good questions. So hopefully, our listeners will check that out. But first, it's time to check you out. So I always like to start by asking, you're at a cocktail party, and somebody asks, "What do you do?" How do you answer?
Yeah, I run a boutique private equity real estate firm that focuses on mobile home parks and parking assets. So, I mean, that's like the short elevator pitch, and that normally drums up additional questions that we can roll into a conversation with.
Exactly. That's why I love to consider the cocktail hour
Yeah.
approach to things. So yeah, so why those asset classes? I think that most people here have probably heard more about mobile home parks. So then let's start with the parking assets. So why parking assets and what kind of parking assets? Are we talking about lots downtown? Are we talking structures?
Both, actually, to your question, and
Mhm.
really the parking lot, the parking assets or parking investments really derive from our decade plus of investing in mobile home parks. There was lots of reasons that we really were drawn to the mobile home park space. Pretty significant barrier to entry, supply demand imbalance, inelastic demand given those reasons. So parking had a lot of similarities when we started investigating it about 6 years ago, and that where we buy parking assets, it's typically in urban core centers, and it's in areas where we're buying parking assets for below replacement cost. There's no new parking supply being built. In fact, a lot of
I was
the
just about to
result,
say, if it's downtown, you
yeah, a
don't
lot
have to
of
worry too much about competition, do you?
in fact, a lot of parking is has been repurposed over the last couple of decades. So the things that used to be surface lots that might have been competition are now redeveloped into high-rise assets, and they're only putting in minimal parking. And so a lot of the major cities across the country, in fact, the majority of the major cities across the country have actually removed the parking minimum requirements from new developments. And so when developers go in to build a mixed-use project, office, hotel,
Right.
whatever it might be, historically they were required to put in X amount of parking spaces per 1,000 square feet. There was typically a formula, and a lot of times it created excess parking more than what they even needed. Now developers have the choice to put in only the necessary parking, and they typically make more money by building another condo unit, another apartment unit,
Sure.
another piece of commercial real estate than that of a parking space. And so what we're finding is that there's a shrinking supply in all the major markets across the country, all the major cities, urban core
Right.
locations. And so that's one of the reasons why we love it.
Right.
And then we
All the
also
while, you
look
have a
at it
growing
as a
demand too, right?
yeah, that's right. And we look at it as it's a cash flow covered land play. And so we're very specific. We look at, last year we looked at about 104 parking assets and we bought one. So we're very specific about the variety of demand drivers. It can't be, tied only to office properties or
Right.
office users. It's got to have a variety of a demand base underneath it that's driving the parkers there, transient, hotel traffic. It's got to be a 24/7
Sure.
city where there's
Restaurants,
something,
etc.
yeah, 24/7 city. There's something happening day,
Hmm.
night, and over the weekends, events, venues, sports stadiums. We've got to have a wide variety and at least five of those things that are driving the demand. And so for us, it's a cash flow and cover land play in an irreplaceable location on irreplaceable real estate. And typically, these footprints are fairly large. In Phoenix, we've got a parking asset that takes up half a city block right in the center of downtown Phoenix, surrounded by all the, just not even new growth, the growth that's been there for many, many decades. So, again, it's a unique asset class. They're not really building much more standalone structured parking
Well, yeah,
or
like Mark
parking
Twain said,
lots.
right?
What's
Buy
that?
land, buy land. They aren't making more of it.
That's right. That's right. And so we love the asset class for those reasons. And we don't underwrite the future redevelopment value, but
Right.
it's a critical part of our underwriting. We want to know that we've got air rights. We want to know that there will be a higher and better use at some point in the future. But until then, we'll enjoy the cash flow. So that's how we look at it.
Yeah, I love it. I love it. And then what about the CapEx? So I imagine CapEx is
Yeah.
pretty minimal here. Maybe resurface it from time to time, build or rebuild a shelter so that somebody can be out there in all weather
Yeah.
conditions.
Yeah. I mean,
Or are you using technology?
well, I mean, kind of all the above, and there's a variety of ways I can answer that question. For example, like a surface parking lot, just a
Hmm.
standard asphalt parking lot, capex is very minimal, and you might have
Hmm.
potholes and some restriping over the years, but it's still
Yep.
very minimal in nature. Whereas a parking structure is a little different, right? It's concrete and rebar, and a lot of the capex requirements really are tied to the environment that it's in. So if it's up in the
Hmm.
Northeast and it's exposed to heat in the summer, extreme colds in the
Right.
winter, salt,
Yep.
that's on car
Oh,
tires,
yeah.
that causes a lot more problems and a lot more ongoing upkeep and maintenance, sealants and things of that nature to keep the salt water from
Hmm.
entering in through cracks and basically you're rotting it
Oh,
from the
yeah.
inside out. And so, we own a parking asset in Phoenix. In Phoenix, it's desert, it's dry. It was built in the
Yep.
late 50s, and it is much better conditioned than a lot of assets I've seen that were built in the 90s in the Northeast. So, capex on a regular basis. We just bought an asset in Philly, so cold environment. I think our budget on that one over a 10-year span is about 3.2. It's about $330,000 a year. And
Well,
it's a
but can you relate that to something? I mean, how do you normalize that to say like
It's about
number of
10%
spots or the
on
square footage?
yeah, on that one I can just give you I can tie it to, gross revenue. It's about 9% of gross revenue on an annual basis.
Okay, I
and
see.
and
Yeah,
and and
makes
it's really
sense.
not tied to number of spaces. It's really tied to, we bring engineers in, we look at what's needed today, and then we run out a 10-year forecast of what's going to you need over that 10-year span of time as far as concrete repairs, sealant on the concrete itself, painting, restriping, technology upgrades as far as parking equipment,
Sure.
maybe lighting upgrades from halogen to LED throughout the garage to
Oh
do
yeah.
energy savings. There's a variety of factors, and every garage is a little different than the next. So, but again, a lot of it's really tied to the environment that the garage is in, where it's located, and when it was built also has a major role in that, and how well was it maintained over the prior years from prior ownership.
Yeah, all very good. Now, I guess we got into the nuts and the bolts of the operations a little bit, but probably the most exciting thing to investors, particularly passive investors, why don't I just plug my book here? We rebranded
Yeah.
our podcast, the Passionate Living Through Passive Investing podcast, got that out in 2024, and Audiobook is just out. So, definitely go and check that out. I know a lot of our listeners are probably just as busy as you and I, Kevin, right? Most of the books I read these days are definitely audiobooks.
Yeah. Yeah, no, I do both. I'm an audiobook guy, but I typically have the physical version as well. I do both, and then I use the physical version as the reference manual for the
Well, that's
audiobook.
exactly right. After I read it, maybe I get 20% of the material and hopefully the most important 20%. But if there's equations, things like that, any sort of numbers, I want to go and look at that again. Yeah, a lot of things I reference. So I often do go and get that Kindle version too. I've got the Kindle Unlimited. That's a great way
Mm,
to go. Yeah.
got it.
Good stuff.
Got it.
Good stuff. I love it. So then probably the most exciting thing is like what sort of returns are you getting in a day and age where a lot of our investors, I think, are probably in multifamily, had a couple of rough years, although I think this is probably going to be a great year to invest in multifamily here recording in the middle of 2025. You're probably giving your investors distributions quite early on, I would imagine.
Yeah, and we've never paused distributions. We're proud to say we've had 24 quarters now of on-time distributions. There was a
Hmm.
about a month period during COVID where we just paused them because we didn't know if the world was going to end or not, or if people were going to pay their rent, but ultimately resumed
Yeah.
them shortly thereafter. So really
Hmm.
proud of what we've been able to achieve. And the parking assets that we acquire, they are purchased in a fund structure. Our current fund structure is very similar to that of what we've done historically, and so it's a growth and income fund. The income portion of it is mostly made up of the parking assets. They are cash flowing day one. There's typically a value add component as well where we can drive
Hmm.
revenues by, increasing pricing or upgrades in technology, adding additional parkers, a variety of strategies that we use there, but they are always throwing off cash flow day one. Whereas the mobile home parks, some that we acquire are cash flowing day one,
Yeah.
but a lot of them are, they're a massive
Takes
value.
some
Not,
some work, huh?
they're a value add
Well,
play.
let's
Yeah, we're
go.
going to bring
Let's go
new
back to the
homes in.
parking. Oh,
Yeah,
sorry, Kevin. I didn't mean to
yeah,
interrupt
yeah.
you, but let's go back to the parking then. So, what sort of numbers are you able to produce on these, and how? I guess I would like to ask. Really, what I'm driving at is how consistent is that? Are there
Yeah.
better times for parking, or is it like farmland where it always seems to go up like a straight line?
Well, I mean, so that again, that I think the answer to that question, as far as the stability of the revenue, a lot of it is tied to what are the demand drivers, and so that's why we look at over 100 to find one that
Hmm.
actually fits our needs,
Right.
right? And so we know that. For example, I use a really good example here. We closed on one in Charlotte, North Carolina, at the end of last year. Right across from this parking garage is the Spectrum Center where the Charlotte Hornets play. Like, that's their home stadium. They just renewed their lease for another 23 years there. We know that they're not going away anytime soon. In addition to that, the city just started half of a $250 million renovation during the off season. They'll finish the other half next off season. So they're injecting a lot of capital into it. The Hornets just signed a new long-term lease. They're not going anywhere anytime soon.
Right.
But it's not just the NBA. It's also, that's where all the major music events happen, in the city
Yeah.
of Charlotte. So it's not going anywhere anytime soon. So very confident with that revenue stream that's going to be there
Right.
for
Yeah. There's the
many, many
multiple
years to come.
drivers.
Right across from our office, we have a sky bridge. We're not associated
Mhm.
with them, but we have a sky bridge that attaches us to the Bank of America headquarters. Bank of America does not have enough parking. They're 100% back in the office. They don't have enough parking to facilitate their employees that are there. And Truist is 1 block away. They also do not have enough parking. Both their
Mhm.
national headquarters. I don't believe that Bank of America or Truist are going anywhere anytime soon. In addition to that, there's a litany of hotels that surround us there that service, all the towers, as well as all the the events that take place at the Spectrum Center. So anyway, we really look at the stability of the individual revenues that are feeding that garage. There's lots of transient revenue as well. Folks that are going to restaurants, local bars, and other street events in the area. And so that's really how we derive the stability. And we want to know that there's not peaks and valleys that
Right.
that we
Right.
can't equate for. And so everything that we've acquired so far, everything that's in our portfolio, is very
Yeah.
consistent in nature. But it ties all back to each of those income drivers and how confident are we of its viability and its durability. Is there a risk of it going somewhere sometime soon? And if so, a lot of times the answer is yes, and we decide
Yeah.
not to move on that asset. Because
Right.
the
Right.
one thing,
Right.
like for example, the one thing I don't know how to fix, a lot of the assets we look at in the parking world, the opportunities that just don't check all the boxes for us. A lot of these parking assets were built, when we're talking about in the urban core areas, they were built decades ago, and a lot of the demand and the need for them was to service office
Mhm.
tenants. And
Yeah.
as you and I both know, in a lot of major markets across the country, office is struggling. It's
Right.
high vacancy rate, and I don't know how to fix that problem. I think there's solution to it in the long run. These things being repurposed, but I don't
Yeah.
know. And in the next decade or two, I don't know how to solve that problem to make the economics work of a parking asset that's got a lot of potential revenue tied to an office property. Maybe the tenants are in there now, but slowly it's seeing a trend downward in occupancy, and that's a huge risk. I don't know how to
Yeah.
reverse that, and so we tend to just shy away from those and move on to others.
Yeah, makes sense, makes sense. Well, let's see. I mean, unless you want to get deeper into the numbers, like what sort of returns, if you don't want to get into that, that's
Yeah,
fine
I mean, I
too.
can again. We look at it. We look at individual deal level returns, but then
Yeah.
everything rolls up into our fund.
Yeah.
Our current fund, is it's been paying out now for the last couple of quarters. We launched it just over a year ago. It's paying out about 6.75 on an annualized
Yeah.
basis right
Good,
now.
good.
As far as projections, somewhere in the 15 to 16% IRR range if you look at it over a 10-year span.
Good stuff.
8.5% cash on cash returns over the lifetime of the investment. Historically, we've been able to exceed those numbers on prior funds. But again,
Yeah.
speaking to like the parking stuff, again, I'll use the example of Charlotte. We haven't owned it long enough, but if you annualize returns, we've owned it
Yeah.
now for, I guess, 9 months. And so
Mhm.
long enough to actually, we understand what's going on. We've got a handle. We've been able to, exceed our budget projections
Yeah.
now each month since we've owned it. And that one right now, I believe last time I looked, if you annualize it, it's going to throw off about a 7.2% cash on cash return.
Good
So
stuff.
solid. Yeah, it's producing, and it's got some
Yeah.
room to run.
Love it, love it. Well, then another asset class that's known to produce great cash returns,
Yeah.
relatively high cap rates, would be the mobile home park. So, why don't you tell us what attracted you to that space?
Yeah, so again, similar things. I've owned hundreds of single family homes years back. I got into multifamily thereafter that, and this is all pre 2008. I spent quite a bit of time building portfolios in the residential space. I understood the residential space very well. Everyone needs a roof over their head. Also dabbled in commercial. This is pre 2008, and then lost a lot of what I had in 2008. It was down in Southwest Florida, where I owned the majority of my portfolio, and it just was very challenging times down here. We can delve deeper if you'd like, but basically, what happened during that moment in time is I had to create myself over the next 3 years. So from 2008 to 2011. Those 3 years were mostly like damage control, trying to work my way out of the chaos that had occurred as a result of the financial crisis. But now was a time of like, how do I rebuild? What do I want to rebuild with? And just by happenstance and somewhat by accident, I met a guy that happened to own mobile home parks. It was an asset class I'd never considered. In fact, I had already committed to myself that multifamily was going to be the way that I was going to rebuild.
Yeah,
I didn't want to own single family properties anymore. I didn't really want to dabble in other types of commercial real estate. I just felt I understood multifamily, I understood the residential needs, and it was easy. Like in my mind, it's easy. Everyone needs a roof over their head, right? It's one of our basic needs. However,
sure.
during that quest of going out and buying that first multifamily property, phase two of my process, I met this guy named Randy, and he owned mobile home parks. And so, he I had lunch with him, and he was just asking a lot of probing questions about me and my past and kind of what my plan was moving forward. And he started kind of pitching me all these one-liners on why mobile home parks were so great and why he felt as though he was kind of trying to put down, what I had historically invested in, multifamily and single family, and why mobile home parks I should look at them and consider. And lots of mom and pop owners, just inefficient operations, and so a big opportunity there to take over something that's been run by a legacy owner that's at it for 20, 30, 40 years, hasn't really injected capital back into it. And so an opportunity there to go run it professionally, put money back into it, and in turn, drive revenues by increasing rents and getting them up to market. Lots of other inefficiencies that he identified. One of the big ones for us, and we see it quite often, it's quite common that an owner includes water and sewer charges in the monthly rent. And when something's free, typically there's a lot of waste, and so we saw that as an
Hmm.
opportunity. And so when we go into a new property, we'll go in and install individual meters and start billing back for individual usage. And typically, 100% of that savings goes to the bottom line. And so, in an
Yeah,
example, underwrote a property the other today in this same situation. Water, sewer, trash is all included in the lot rent. Their water sewer bill on an annual basis is $240,000 for the entire community. You can run quick math on that. If we can do a recapture of 100% of that
yeah,
by investing about $100,000 up front, it's multiple millions of dollars of additional value. So there's lots of these
yeah.
inefficiencies that Randy really pointed out to me. But the big one for me that really piqued my interest was the lower turnover. Our model is mostly built around homeowners. And so we basically own the land and the infrastructure.
Yeah.
We do not own the homes. And so our
Right.
average
So that's
resident,
common, right?
yeah,
Most operators seem to hate the park-owned homes. Seems like most people, when they acquire one, the first thing they want to do is get rid of those. What
that's
maybe?
true. And there's some that love it. There's some that embrace it and they make it a part of their model. I haven't, we own about, I think probably about 400 homes throughout various parks. Some parks we own zero. And so in the perfect world, we would own zero because I don't see
Yeah.
the profitability in the rental model unless you're in an incredibly high rental market. But if you're in an incredibly high rental market, there's probably even a better chance of you just selling out from underneath that home. That way you don't have the future repairs and maintenance associated with it. And really
Yeah.
the business model and the profitability in the business model really derives around renting out the land.
Right.
The repairs and maintenance and overall operational expenses are significantly lower when you don't own any homes. And on top of that, you don't have as much turnover. We've got
Right.
residents that
Right.
have lived in
Exactly.
our
Owners
communities
just
for
treat things
40.
differently.
Yeah, I mean, we've got residents that have lived in some of our communities for 40 years. I mean, because it's
Yeah.
to them, it's they live in a subdivision. This is their home,
Yes.
um,
Yeah.
and they don't move. They stay there. Whereas a typical renter, they're transient. They might stay 18 months or maybe multiple years, but the average renter is probably not staying much more than one or maybe two lease terms.
Good, good. And I love you mentioned many efficiencies that you drive there, but my favorite is the individual metering because as you said, it all goes to the bottom line. And that's something
Yeah,
that's going to improve that. That's going to improve your expense ratio. And that's super, super awesome.
absolutely.
Yeah,
Yeah.
love it. Love it. Love it. All right, awesome. Well, why don't we talk a little bit about entrepreneurship? Actually, this show started out as my love letter to entrepreneurs as the Foundry, all about founders. And so I understand from an early age, you really always been an entrepreneur. I think you had a paper route at 12,
Mhm.
and then at 14, I think you were already operating a business out of your parents' garage. So tell us what led you to such an early entrepreneurial start.
Yeah, I mean, I think for me it was just I grew up in had a great a mother, father, great family, but we didn't have a lot. We weren't poor, but we were your typical middle class. Both my parents worked. We always seemed to have conversations around money going through the house. Had always had refinance going on, or a new car, or having to get loans on things, and just money struggles, right? Like we went on one family vacation a year, but outside of that, we didn't have a lot of excess. But it was all relevant. Like it didn't matter. Like I didn't know any different. Like I knew what we had, and that's all I knew. I didn't have anything to compare it to. So that was my world. But I did know that, certain friends in the neighborhood, they had the newest bike, or they had, whatever it was, sports equipment, whatever it
Yeah.
was that they wanted. And I just knew that my parents didn't have the money to buy it. And so for me, it was wanting to work at an early age was born out of kind of necessity in my own mind of like, I want these things. I know my parents don't have the money to buy them. And so if I could go make money on my own, that's great. And, we had chores as kids, my brother and I, I was probably mowing the grass at age 6 or 7. My parents required that we had to do the lawn work and all that. And so that's where it really started, was mowing grass and shoveling snow. One of my elderly neighbors asked if I would mow the grass for him. He saw me out mowing the grass one day, and I'm like, sure. I think I was probably 8 years
Yeah,
old.
I love it.
Sure. And honestly, I was doing it because he was a really kind. He was just a nice guy. Like he was a nice neighbor, and I did it. And he threw me 10 bucks, or maybe it wasn't even 10 bucks. Maybe it was 5 bucks. But and that just like a light bulb moment went off. I'm like, well,
Yeah.
heck. And I asked my dad, Dad, do you mind if I take the lawnmower around and see if there's anyone else in the neighborhood that I can mow their grass
Yeah,
for them and make
good,
some
good.
money? And the shoveling the snow, the same thing came about, right? I just went around, knocked on doors
Yeah.
when it snowed, and we shoveled snow. And then got a paper out at the age of 12. Once I started making my own money, it just kind of snowballed from there. I didn't want it to stop.
Yeah.
And I got good at trying to see opportunities to where it would lead to, back then it was material items. Today it's more lifestyle, of everything I
Right.
think
Yeah.
about my
Yeah. More
why.
freedom.
But I mean, that's
Yes.
really it. It was just I wanted things, and I wanted to be able to buy them. And so the only way to be able to buy them is go find a way to make my own money. And yeah, that was it. The
Gotta
word
love it.
entrepreneur,
This is a great education,
the
Kevin.
word
I,
entrepreneur wasn't a thing. That wasn't a thing at all. I didn't know any business owners. I didn't, no, my
Mhm.
parents didn't have any friends that were business owners. And so for me, it was just say,
Yeah.
hey, everyone else is being lazy watching TV, and I can go make some money. And if I do that, I'll be able to buy that new BMX bike that just came out.
Ah, DMX, are we the last generation that actually
I
rode
think
bikes
so.
around all the time?
Yep.
My kids
Yep.
do it from time to time, but it's not the same. I had this area by my house that was undeveloped, and we had everything. We had like hills, and we had jumps in the middle of the woods,
Oh
and
yeah.
there's
Yep.
always a dead man's curve. Some
It's
legend around it.
now you got the kids that have the
BMX.
scooters. They don't even want to pedal anymore. They just want to ride these electric scooters around, which drives me
Yeah,
bonkers.
it's
But
not the same. It's not the same. Yes, exactly. So, for those of you who don't know, it's bicycle motocross, but you have to pedal it. That kind of a motor.
that's right.
Oh, wow. Those were the days. All right. Let me see. A couple other things. I'd like to talk to you about success in this business. You've got to be careful. You got to be conservative. I'd love to hear what are some of your favorite metrics that you look going in on a project.
Yeah, I'd say that assuming that, from an outside looking in, assuming just on paper and after an initial, financial model, if that looks good, that tells such a small amount of the story, right? And so let's
Hmm.
assume that you're looking at a property, and the numbers seem to make sense. I'd say the next important thing, forget about the rest of the data. You can go and you can look at demographics on the market and try to get a gut feel. And we do all that. But going in person, nothing can replace actually going to visit a property in person. Like I literally,
Yeah, sure,
we've got a
sure.
whole team behind us. We've got an acquisitions team. We will not buy a property unless I go spend a couple days in the local marketplace. I don't care what the data suggests. I don't care if it's right next to a Target and it's right next to all this new development. And one could argue that, hey, they've got all these big corporations have big R&D pockets, and they've spent a lot of money
Yeah,
researching the area, so it's got to be great. That still doesn't tell me the whole story, because there's been situations where my guts told me something different, and we decided not to move forward, and it was a good decision after we look back.
yeah.
So I'd say just getting an intimate feel for the marketplace, spending time there, talking to folks, literally go to the Chamber of Commerce, walk in and talk to other
Love it.
businesses
Yeah,
in
I love the
the
personal
area.
approach. I think that's
You
totally
have to.
underestimated. totally underestimated. And then, just actually getting the boots on the ground, understanding the market. That's another thing that I think is underestimated by newer operators. Older operators like you, more experienced, I think, understand that. What about metrics? Like on the page, where does break even occupancy rank for you?
Yeah, I mean, we always run a sensitivity analysis, and it's tough to say with the mobile home parks because a lot of times I can speak to it from we take it over and it's a value
Mhm.
add, so it might only be at a 68% occupancy when
Mhm.
we acquire it, and we're looking to get it to 93% in the next 3 years.
Yeah.
But typically, our break even point somewhere in like the 85% occupancy range.
No.
And,
Mhm.
and most of our parks, once they're stabilized, they hover in the 94 to 97% occupancy range in all the markets that we own in. Some are stronger
Good,
than
good.
others.
So you're buying only in the strong markets. You're not looking for any deep value.
No, and it could be deep value, but it's got to be in a great market. This is
Okay, I like that. That's a
yeah,
good
yeah. The
distinction.
thing is, I mean, I always make the joke of the one thing you can't change is the market.
Sure,
You could take a property in inferior market, pour a bunch of money into it, make it look great, do all the improvements to it, but you're
sure,
not going to
sure,
change
sure.
the surrounding area. I don't care how nice you make it, you're not going to be able to attract the clientele and the tenant base that's going to allow you to hit your numbers. Whereas on the flip
Yeah,
side, I could buy the ugliest property. That is a deep value add that is a
sure.
major lift. It's got the wrong demographic living in it now, but it's surrounded by the right demographics and it's surrounded by the right schools and it's in a growth
Yeah, oh
area. And
yeah,
I know that I can actually wipe the slate clean and
exactly.
pour capital into it, make it be a place that someone wants to live. And I know that people will be lining up in droves to live there. And so that's the one,
Yeah.
the market is the most important. It goes back to the point of me wanting to spend, an intimate amount of time in a local marketplace to get a feel for
Yeah.
not just the property, like visually driving through a property is one thing, but actually spending time around the other businesses that surround and service that property is entirely different, and you're gonna get a more complex and comprehensive story of what's really
Hmm.
happening in that local marketplace, and then ultimately have better expectations of what's really going to happen, not just what your financial model shows you, your Excel deck tells you what's going to happen, but what you're feeling is really going to happen in the coming years there if you buy that property.
Great. Love it. Love it. Okay. Well, I think so far it's been a very easygoing thing. Let's see if we can turn up the controversy a little bit, and maybe you can tell us some mistakes that you see other sponsors doing right now.
Yeah, right now I'm not sure. It's interesting because it just there has been a lot of activity in the last couple of years. We've
Right.
had two of the most active years of
Mm.
Sunrise's history, 2023 and 2024. But I can only tie that back to maybe some mistakes that sponsors made in 2020, 2021, 2022 when rates were low, capital's flowing. I think just a lot of folks, and this is interesting. We had this not dilemma internally. It's myself and one other principal in the organization. He's on the capital raising side of the business, and if you had to bifurcate our company on the middle, it's the capital side and then the acquisition, the operation side of the house. And
Right.
and I'm on the
Right.
acquisition operation side of the house. And so whenever I find opportunity, I need money. When he has money, he wants me to find opportunity, right? So there's always this push and pull. And the biggest dilemma that we
Yeah.
had back in that time when it was just it's the heyday. Everyone's buying, you're getting outbid on everything, hard money right day one, that type of
Oh
stuff.
yeah.
Um,
Yikes.
we didn't buy, we weren't nearly as aggressive. We didn't buy a lot. We
Good.
grew, but
Good.
we didn't grow anywhere near what a lot of our competitors were growing. And
Right.
again,
Some
I
of them
just
are shrinking right now, I'm
well,
sure.
that's it. So that's it. So like we turn money away, which is hard to do because it's going to go find another home somewhere else. But I think that
Yeah.
put us in a really good position. So I think the big mistake was that it's just, money's here. I feel pressure to go buy something, and we can all have it make sense on the Excel doc, right? We can look at the model and we can finagle it how we want and make ourselves feel
Yeah.
good that rising tide is going to continue lifting all the boats, and the music will never stop. But inevitably, the music did stop. We did never thought that rates would go up that fast, that quick, but. I think that those that were very disciplined in what they bought, even with rates going up, I think, and had some financial capital behind them and some longevity, were able to make it through. Maybe not complete unscathed, but they were able to make it through, these last couple of
Sure.
years. Whereas the ones that just made short-sighted decisions and investments became exposed. I mean, the tide went out,
Yeah.
and it's very
Yeah,
clear now.
exactly. You don't know who's
Very
swimming without a
clear.
suit until the tide goes out,
Yeah,
right?
yeah. So I think just you know again, I'm not going to act as though I can't find deals that make sense. And so for that reason, we're not taking the money. We're not going to buy them. It was very simple. It wasn't a, hey, I'm more disciplined than the next person. It's like I don't know how they're making it work. In fact, there was I had probably gained a complex over those couple of years. So I'm like, I feel like I'm pretty smart. I don't know what other folks are doing. Like, do they have a secret sauce I don't know of how they're
Right,
paying
right.
this much more for a property? And
Yeah,
there are other better operators than us that maybe just do it better. But now I know. Now I feel very confident saying that wasn't, that might be a small portion of the case, but the majority probably were folks that were just simply overpaying, right? Because they had capital, they had firepower ready to go, and they were buying because they knew if they didn't buy it, they'd have to give that capital back. That capital go find
right,
another
right.
home.
Well, that's huge, actually, and I think that that's really key. Having that sort of discipline, turn capital away, turn away deals, being willing to not be the highest bidder. I think all of that is very huge. And then, when you have that sort of discipline, and you're right, then you're able to look back and say, yeah, it sure was just FOMO or deal
Yeah.
heat.
Yeah. Well, at the end of the day, I think that if you talk to any folks that have been in business, 30, 40, 50 years in real estate and have made substantial wealth, you'll find that it didn't happen in the first 10 years. This is a long game.
Yes.
There are other ways to make a lot faster money. I mean, go buy a service business or something. I mean, it's seriously, if you run it correctly, you'll get much better returns in that type of operation than you will investing
Laundromats.
in. Yeah. I mean, there's faster ways to make money. I'm not going to say it's
Right.
easier. There's faster ways to make money. Real estate is a
Yeah.
long-term play. And so I think, a lot of folks just got caught up of looking at things over a 3 to 5 year model, a fix and flip, and ultimately they were hitting the returns in a year and a half and just thought that would, they were, continue on that same ride for forever and ever without the music stopping. So I think it's just being disciplined, just knowing going into this, that eyes wide open, this is a long-term play. In fact, we've gone as far as over the last probably 4 years. We've really honed in our investor base. Even, everything we underwrite, we do it to 10 years. We forecast 10 years, but we're very clear with where long-term holds. Our choice is to not ever sell, ever, not meaning forever, but like we want the autonomy to be able to carry 10 plus years if we see that it's in everyone's best interest, ours and our investors. And so we really focus on the investor base that is more wealth preservation. I mean, they've made their money. They're looking to set it and forget it. They don't want a capital event every 3 years, or a tax event every 3 years when we sell a property, because now they got to go find another home for it. And that takes a lot
Right.
of work. That in and of itself is a burden on LPs. I mean, to find it, not just find the investment, but vet sponsors and find the right home
It
for
is. It's also a good
capital.
problem to have.
It's a good problem. It's a good
Yeah.
problem. So, but we're
But it is a
looking,
problem. Yes.
really, we want the folks that, hey, like, we're in this together for the long ride. We're gonna do well financially together as a team, but it's a long-term endeavor, and just never be forced to sell. There's always those assets within a portfolio that just seem to rise to the top, right? Like they're just like the cherry assets, and
Yeah.
not ever being forced to sell some of those. You might liquidate some other things, and so that's kind of we structure things now,
Yeah.
and really bring along those for the ride that want to just get
Yeah.
that mailbox money, not just for
Good.
three
Good.
years, but for 30 years.
Right. The cherries, not the lemons. Let's talk a little bit about leadership. How do you teach your team to make great decisions under pressure?
Yeah, that is a great question. I think a lot of it ties back to you know uh, just empowering them. Anytime that a something that rises to the top is brought to my attention, or we how we teach some of the other leaders within the various departments is, don't come to me with a problem. Come to me with a problem with, two or three potential solutions of what you think, whether you
Perfect.
think they're silly or not, right? And I think that really, just that one exercise alone really starts empowering folks. Once they
Yeah. I
realize
love to
that
do that
probably
too.
probably one of those three potential solutions they bring to you is actually one, might even be better than what you would come up with, right? And so I
Good.
think
Good.
just once they realize that their answers actually might be the answer, it starts empowering them to start making decisions on their own and taking accountability, and feeling good about the decisions and choices that they're making within the organization.
Yeah. Well, as somebody who's become very successful, thinking back to a time when you were less affluent, is there anything you miss from that less affluent stage?
I'm a pretty humble guy. I don't know. So I don't think of myself as I've made it or wealthy. I
Okay.
pretty much do the same thing today as probably, maybe I just travel a little bit more than when I didn't have money.
Right. Okay.
But outside of
So
that,
it's
we live
not
in
one
a pretty,
vacation a year anymore.
And then we live in a pretty modest home.
Yeah.
I don't change cars every
Okay.
6 months. So I don't know. So I'm a boring guy. I really am. I'm just a boring investor. I
Well,
like to
that
make
sounds like the kind of guy I want to invest with.
I
That
like
sounds
to
exciting
make
to me.
I like to make solid, boring investments. I mean, the most important thing for me to, what we're growing here, there's a why that's related to my family and
Mhm.
buying back time. That's one thing that we don't get more of, right? Is
Yes.
buying back time to
Huge.
spend time with them and create memories and experiences together. So that's huge. We just got back from Greece literally a couple days ago.
Love it.
In
What
fact,
part of Greece?
so we love boating, and so we spent a couple days in Athens, but then took a little puddle jumper to Pados, one of the islands, and then spent 7 days sailing around to a bunch of the different Greek islands. So
Well,
um,
which islands?
I knew you were going to ask me that, and that's funny because
Oh, okay.
yeah, and I don't remember all the five that we went end up with five, and I
Okay.
don't. Naxos was
Okay.
one of
Okay.
them, Pados,
Okay. Okay.
and now I'm forgetting the other one. So so my wife was
Okay.
like, "Someone's going to ask you which ones you were at," and I'm like, "I'm not going to remember," because we changed up the itinerary based on weather, and so we didn't even go to the majority that thought we were going to go to. Um, like we didn't go to Santorini. It was too windy, so we couldn't make
Okay,
the.
that's what I figured. Yeah, yeah. You're talking about the Cyclades. So that's where everybody
Yeah,
goes. Yeah, it's too windy. That's why I always wanted to go to the Ionian
yeah.
Isles. That's the home of the poet Homer. So
Okay,
yeah, that would be my Odyssey. But it'd be
gotcha.
enough for me to, I don't have to go to Troy and back. It'd be enough just to sail the Ionian Isles one day. But
Yeah,
yeah,
no, it was a
sailing's a
great
huge
trip.
thing for me. I mean, you notice I feature that on the cover here, and usually the first question I get is, "Well, that's not your beautiful wife on that cover," but the handsome man there is not me either. So yeah, we had
Yeah.
some models. I think it's actually AI generated, but
But back to the original question for me and my partner, what's most important about our organization? Like we've spent a lot of time and energy getting the right people on the bus, getting the right butts in the right seats, and really and getting a better understanding of their whys, their individual whys, and really empowering them and knowing that we're here to help them grow as individuals. That we
Mhm.
want them to grow within the organization, and we really want to create something that lives and breathes on its own, that it can, not help
Yeah,
just the founders, reach their own personal goals and financial goals and whatever they want to do, but help everyone that's in the organization have that same opportunity. So I think it just have something that, you don't have a business that you can truly go away. Anyone can go away out of the organization for weeks or months at a time and everything falls apart. Right. And so just creating something sustainable that everyone's excited about, everyone's in alignment. Folks are, they're excited to come to work. They're excited to, they've all rowed in the same direction and just have the same level of buy-in that this is
love
part
it,
theirs,
love it. All right, how about just one more hard question? Can
Yeah.
you share your earliest memory of pain or struggle?
Yeah, it's yeah, no, I can. So like I said, I started making money at a young age, and as I got a little older, probably in my early teenage years, I really started identifying my parents' struggle with money. It's seemingly just, oh, mom and dad, I love you, but like, just they seemingly just always made bad decisions, buying things when they didn't have the money to buy it. It gets back keeping up with the Joneses, right? Like that was real in our
Oh, it's hard.
household.
It's hard.
And I think I was a sophomore in high school, I believe, and my parents had already filed, probably a couple years prior. They had filed Chapter 13 bankruptcy to keep our home out of foreclosure, and most of it was tied to just credit card debt, buying too many things that you couldn't afford, and then had to do a restructure plan. And a couple years thereafter that, they had just wrapped up the plan, and literally, I forget what bad decision they made, but ultimately it landed them back in the situation where they couldn't pay the mortgage for. And they didn't say anything. They didn't bring it to my attention. Why should they have? I was only, whatever, 15 years old.
Yeah.
But they brought to my attention when it was in a dire situation again, to where we were going to lose, like we were getting like pre-foreclosure notices at the house. And I don't think there was an option at that point to file. Like, I think there has to be a duration, a gap in between filing bankruptcy again. I don't think that was an option.
Oh, wow.
And so I had like $7,000 that I had saved from, paper out and all this other stuff. And I loaned them money. Like that was, I think it was painful for them to come to me, but it was painful for me to, as a kid, I'm thinking like, this is my money, like I'm
Yeah,
living
you're
rent free
rich,
here.
man.
I'm fifteen,
$7,000?
fifteen, 15 years old. And I had to I ended up loaning them the majority of it because it was more than just the mortgage they were behind. It was
Yeah,
behind on
yeah.
other stuff as well. So again, That was more financial pain because I felt I'd worked for many, many years to save up that money, and
Yeah.
they paid it back over time.
Oh, that's an
Things
awesome
they got
story
things
there. I love it.
right sided, but it was more painful to see my parents go through the financial struggles. Like to them, I knew how hard that must have been for them to come to a 15-year-old, obviously youngest in the family, to actually have that I mean, it was so awkward. It was my mom that came to me.
Yeah.
And it was just so awkward and uncomfortable. And she was crying, and like that hurt me more than anything to see see your parents cry. Like that was more painful than like the money, but
Yeah.
so anyway, like that, as far as like tying finances and emotions, like that's probably the earliest memory I have of just kind of a painful experience that got kind of ingrained into me.
Yeah.
But I think it also helped shape of who I am and my respect for money. I feel like I had a respect for money, but I feel like it helped me even better respect money later on in life. And I view money very differently, I believe, than what they did. And I don't think that maybe would have been the case if those earlier years didn't shape me as an individual.
Yeah. Beautiful. Okay, yeah, usually I like to ask some whimsical questions just for fun to get to know you better, but I think we're going to have to skip the crunchy peanut butter versus smooth and just go into the deep stuff. So these are my favorite questions. I call these the seven, and we are about to enter, oh, we actually about to enter the lightning round, but we got to do one more thing. You love to give back, and I think this is super cool. I just wanted to have an opportunity to talk about your 72 hours to Key West 280-mile bike ride. So tell us what that's all about and who does that benefit?
Yeah, absolutely. It's a ride I started 15 years ago. This will actually be our 15th year of doing it. We
Yeah.
do it in November, and we ride from Fort Myers Beach down here on the southwest coast of Florida, all the way down across the Everglades, and then down to Key West, the southernmost point in Key West. And we do it over 3 days. And 75 riders. I limited out every year to 75 riders, and we raise money for two charities that are near dear to my heart. One is the Tiny Hands Foundation, which is actually operated by a good friend of mine, Rod Cleef. Been a good
Oh,
friend of Rod's for
nice.
over 20 years now, and have helped him in his organization for many years. And then the other one is starting right now, and it's another local charity here to the Tampa Bay area, but just something that's near and dear to my heart. My wife and I have been involved with that charity for a number of years, and so and for me, it was this started 15 years ago when I just lost everything, after '08. I used to financially support Rod's charity, and he used to personally support his own charity and never took donations. And it went from us feeding thousands of families on an annual basis to basically like a few hundred because both of us lost everything after the crash. And so
Yeah.
I couldn't financially support him anymore. But I had two legs and I really had a passion for cycling. And so I threw this ride together, so thinking, hey, even if I could
Wow.
donate a few $100 or a few $1,000, like it would be a huge win. And now, in that first year, I think we only donated about $300. We had 7 riders that did it. And it was a hodgepodge thing kind of thrown together with a minivan and a couple
Yeah.
coolers to support. And it's
Exciting.
turned into a much larger organization. And I think we've donated now nearing $1 million now over the years that we've been doing it.
Wow.
And it's been a
From
lot of
7 to
fun. So
75. That's huge. I love that story. I'm so glad we had the opportunity to do that.
yeah,
Okay, so now the lightning round. Kevin, if you could be known for just one thing, what would it be?
I think being a great husband, a great father.
What is one mistake that has taught you the most?
Hmm. Always being the first to apologize, even when it's not my fault.
Okay, okay.
Yeah, not tied to one particular mistake, but
Sure,
um,
sure. Fair, fair. Okay, and then what personal characteristic has been most pivotal to your success?
I think being a great listener.
Oh, that's huge. Love it. All right, random question. So we will have one whimsical question today.
Oh,
Just
what
tell me
is
when
it?
to
What is
stop
it? What
cutting.
what is this stack? I have to know about
Yeah,
that.
this is my stack of crazy questions. So just tell me when to stop cutting.
Stop.
All right, top question is, would you prefer money for a housekeeper, cook, gardener, or personal secretary? Housekeeper, gardener, cook, or personal secretary?
Yeah, personal assistant, secretary.
Oh, that's good.
Always.
I was going to say that I need the housekeeper, but come to think of it, yeah, we lost our housekeeper, but still have my personal assistant.
Well, I think I've got a phenomenal personal assistant, and I think that I am, at least 3x more successful because of him. And I've had others and over the years, and I think that my business partner has his own, I have my own, and we've had our own for many years. And I think that having a strategic personal assistant has allowed us to grow professionally and as an organization by leaps and bounds. And so as a result of that, we are more financially stable or better financially well off. And so that being that we make more money now, we can then afford to pay the gardener, the cook, if you want one, and all that. And so I
Mhm.
wouldn't be able to do
Yeah.
that if it wasn't for the executive
Love
assistant,
it.
strategic executive
Love it.
assistant.
Got a
So
great assistant myself, and she'll be editing this episode. Okay, can you give us a tip or trick that investors can implement in their business today?
you mean from like a perspective, like a passive investor? Is that what you mean? Or
Well, no, I mean, anything. I mean, you're in the business of mobile homes and parking assets. Could be anything. Could be related directly to your stuff. Anything. I mean, some people say there's no tricks. Don't cut corners, but
yeah, I mean, I think we talked about it. I think it's a big one. And like I
sure.
said, just local market knowledge. I mean, I think that's in that,
Love it. Love it.
that's relevant if you're a sponsor or if you're an LP. Like if you're
Yeah,
an LP
good.
and you're looking at a deal that a sponsor has, the deck looks great. You looked at the financials, looks phenomenal. You've heard the webinar, everything seems great.
Yep.
Go spend time there, not just in the asset. Don't go just do the tour. Go spend time in the
Oh
local
yeah.
marketplace and talk to other businesses and get your own feel and own lay of the land. And don't just take what's handed to you.
Well, I love it. I think that helps to pick the cherries because, wow. Yeah, the more you know, the more you know. Can you give us a book recommendation?
Yeah, it's one I read like once a year, and it's probably the book I've handed out more than any other book to coworkers or just colleagues or friends, and it's The Go Giver. And I always forget the
Oh, it's a
darn
beautiful one.
author's name, but it's a short read, and
Bob
it's a very
Berg.
powerful book. There you go.
Yes. Yes. Great book. Great book. Yes. Bob Berg. All right. Can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
Oh man, you're hitting me up hard here. I don't know if I have got a quote off the top of my head. I don't know if I've got one just off the tip of my tongue, my friend.
The sun
But
never sets on Sunrise Capital Investors. How's
there you go.
that?
That's a made up quote, but I like it. I'll take that.
Okay, yeah, someday you'll own all across the world, Philippines, China, whatever it takes to make that true. I wish you the very best, and I want to thank you so much for taking the time to share your knowledge and experience with our audience, Kevin. Just one final question: email, carrier pigeon, smoke signals. What's the best way to reach out to Kevin Bupp?
Yeah, so I'm very active on all the different social platforms. I'm very active on LinkedIn, so you can reach me there, Instagram, Facebook, and then if you want to come see what we're doing at Sunrise Capital, you can go over to investwithsunrise.com. Got a lot of good information on the site outside of just the offerings that we currently have available. We have case studies on
Mhm.
there. We've got current webinars. We're pretty transparent. We even go as far as putting up third party reports and things like that for folks to review, just so they get a sense of who we are and how deep we go in due diligence and just how we do what we do, our craft.
Right, and I think you got your money school up there too. Is that's your educational wing?
That's so there's a bunch of things on that website. I forget. I think my podcast you can get to there. There's some
Yes.
other resources. We've got some white papers that we've written on parking investments, mobile home park investments. There's a lot of different resources. Honestly, I haven't been to our own website for a couple of months, so there might even be other things up there that I'm not aware of. But yeah, there's lots of good. It's not
Yeah.
just a sales pitch on the website. There's actually some good reading and good resources that will provide some additional context of who we are, but even help you in your own business. I mean, if you're looking at, hey, I want to learn about mobile home parks or I want to learn about parking, we've got some great
Yeah.
resources there that you can read upon yourself and make a determination if one of those asset classes might be for you, and if you want to go off and do it on your own.
Love it. Thank you so much, Kevin. Beautiful episode.
George, thanks for having me. It's been a pleasure.